market update for Monday, October 17th of 2016. This is George Papazov from Trade Pro Academy. I want to remind you that the information in this presentation is for educational purposes and does not constitute investment advice or individual trade recommendations or solicitation. You should consider if engaging in activity is suitable to your own financial situation. Trade Pro Academy is not responsible for any liabilities arising as a result of your market involvement or individual trade activities. Education only. Welcome to our update. The markets kind of stalled off a little bit since the 9:30 open. We had some downside, then some upside. At the moment, Fed Vice Chair Stanley Fischer is speaking, and that's causing a little bit of downside on the market. Here's what he's saying. He says that low rates make the economy more vulnerable to shocks. Global factors are contributing to depressing U.S. interest rates. That's what he's saying in New York at the moment. Lower trend rates could mean deeper recessions. Productivity declines and lower labor force growth is weighing on economic growth. And he said stimulative fiscal policy could help in the next recession. All right. And interesting comments coming out. With that being said, there's about a 93% likelihood they do not raise rates in November. And it's at 30% that they do not raise rates, or 70% in the December meeting now. So the odds have decreased for a rate hike in November and increased for a rate hike in December. And it makes sense. They probably won't hike before a presidential election, despite saying they're not politically tied in any such ways. All right, let's have a look at what's kind of driving the markets this morning from a news perspective. We got a weak release at 8:30 in the morning on the Empire State Manufacturing Index. Typically, an index that's a lot more important in the past than it has been of late. But it's basically a manufacturing index and a survey of manufacturers in New York State. Above 0 indicates improving conditions and below indicates worsening conditions. It's considered to be a leading indicator of economic health. All right, well, how did it do today? It absolutely, it stunk. It stunk so bad. It was released at 8:30, and I could still smell it in the office here right now at 12:30. So it came out at minus 6.8. Expectation or forecast was 1.1. So the expectation was above a 0, and it dropped below the 0. That's one sentiment indication, but more importantly, dropped 6.8 below the 0. So manufacturers aren't as rosy and cozy as previously thought. Look at this. That's a pretty negative number. Negative 6.8 comes in line with not really 2016 lows, but it's down there. Just as we peaked our head above in the past couple months, boom, it just gets pushed right back down. So the trend is down, lower below 0. So manufacturers aren't as confident. That kind of put some downside pressure on the market at 8:30 in the Globex session, or the overnight lows. And from there, it was temporary, very temporary low, and then it rallied upwards to the high before it failed. I'll show you the chart in just a minute. What else do we have? We had industrial production coming out slightly worse than expected. So from an economic standpoint, things weren't that rosy, hunky-dory, and or peachy. However, the good news came, one second. Fisher is still speaking here. I'll squawk the news as it comes out if it's important and I think it can move the market. All right. The one thing that was a little rosy and exciting this morning is the open of Bank of America. So at 6:30, 8:30 was their press conference. At 6:45, rather, in the morning, they had their earnings report for the third quarter. And Bank of America is one of the first banks to announce their earnings, so it's very heavily looked upon to see direction of the finance sector as a whole. And here's what came out. So at 8:30, actually, let me find the Bank of America. I'm just going through it here. It was earlier than that. There we go. Bank of America, 6:44, reports Q3 at 0.41 cents. So 41 cents EPS versus expected of 34. That's a clear and decisive beat. Revenue was $21.6 billion versus $20.8 billion expected. Net interest yield 2.23% versus 2.19. So NIM, or net interest yield, is where the bank makes money. That's how they're really classified, or that's how they earn their revenue and generation. So higher net interest yield is good for the bank. That means what they're earning on deposits and lending is offsetting what they're paying out. And I mean, you wouldn't be surprised because interest rates are so low, right? Tier 1 Basel III capital ratio is 10.9 versus 10.5. So it showed a strong earnings report. It beat expectation on strong revenue, good net interest yield, and the Basel capital ratio showed they're overcapitalized within the requirements. So what ended up happening? Stock was up. It gapped open to about $16.13. In our morning update, we emailed you guys saying we're going to try to come in and buy some of these dips. I had drawn it on here. And this is kind of what I predicted the price action to be like. I'm getting something similar, but a little bit lower. All right, you can't guess how prices are going to open, but the idea here was on the open to sell off and try to catch some support levels to get long. And that's exactly what we've done. We've gotten long around the 16 even, and we see some more upside potentially on an earnings gap. On the open, one of the surest bets is to fade this gap. Very often when a stock gaps up, this is called a window in the chart. That window gets closed or faded at the very least. You can see we didn't really close the gap. All right, this earnings gap is still open by a very, very thin margin. That doesn't mean that it's going to go through. It could, but I think the upside is the right side on the stock in Bank of America. And I think whatever the equity market as a whole does will end up putting some momentum in Bank of America. So if equities rally for the day, they'll pull Bank of America up. Bank of America is looking for a reason to rally at the moment. Really good earnings, good report. And just the equity market was weak and pulling it down. So if equities kind of keel over and start rallying a little bit or even hold their gains and consolidate sideways, Bank of America should take off in the afternoon. So we're still long that. Our stop loss about 15.88. If you want to see the exact options trade that we're doing, sign up, subscribe, become a Trade Pro, one of our packages. And if you want to receive the morning email updates, click the link below here on YouTube that I'm going to post, and you can subscribe to that. It's absolutely free. Go to tradeproacademy.com/TradePro Daily. You get that newsletter at 8:30 with one trade idea on a daily basis. All right. Let's have a look at S&P 500. S&P 500, you could see how it's kind of done on the 15-minute chart. Here's what I was alluding to. 9:30 open weak. That weakness got bought up, got weak again, and we're kind of holding. This looks like a bit of a diamond pattern from a technical perspective, which indicates it might be a top. So just be very careful because on rallies, volume's declining. On sell-offs, volume looks like it wants to rally. And recently, there's just a drop-off of volume. So right now, about 12:30, this is when a lot of traders are still on lunch. At 1 o'clock, we're going to start to see whether we can take out this 21.30, take out this 21.25, and start targeting these lows on 24. So let's go on a 1-hour chart, and I want to show you some levels that you should watch for this afternoon. All right, 21.35 on the index. You absolutely must have that on your chart from a daily perspective. 21.35 is really important. A break above here gives you an opportunity to buy a dip and try to catch the run for this 48 in the afternoon. Okay, I think we have a lot of shorts right now in the market. We have a lot of buy stops coiled up. And if we get some upward momentum, I think we could squeeze those shorts out right off of that support. On a daily chart, look what we're looking at here. Okay, we're looking at some bearish momentum slightly, but we're towards these supports, and we've had nothing but buying happen below 21.30. One concern is we're still coiled below the 100-day moving average. All right, so from here, buyers have to take us up right away or today fail, and we might see new lows. If we do, be careful tomorrow because tomorrow becomes a super important day. Tomorrow's Tuesday. It's called Turnaround Tuesday, and we could get a rip to close off some of those shorts. Okay, but you need to know over the last couple of days, obviously the downside has been the side that's been making money. Okay, they've kind of come in quick here through the zone at 21.30. They've slowed it down, so buyers are at least suppressing them. And if they could hold them off long enough, all these sellers have buy stops on the way up. So they could run price right back up to 21.60 very quickly. Okay. And of course, the downside scenario is if it cracks this support at 21.20 with the price riding down the Bollinger Bands and bouncing off the 100 as support for the bears, downwards we go. 2100 is your next level. We'll get that this week. Okay, so we're at right here. We're at a pivot. We have to decide which way we want to go. Oil prices, Anatoly, I see your question. I'll get to it right after we close off the YouTube section. You're a subscriber. I want to give you more time. I don't want to rush it through the generic YouTube update. So if you're going to hold tight, just give me 5 minutes. I'll answer that question for you. CL1, this is oil. Look at this. Oil's kind of coiling in back into this triangle that we've been talking about this morning in the update. I'm watching this for a breakout very closely. On the downside, you're starting to see some volume come in, but not much. And to be perfectly honest with you, on this downside, you see some volume, but then the coil is happening with no volume. I think the breakout might come to the upside. I think equities and oil might pick up from here and rally up to some highs one more time before we get a drop. There's a lot of nervous traders at the moment heading into the election, heading into this rate hike rise. So another thing that could potentially happen is just stay sideways. Okay, nobody says the market has to move. And remember, a triangle, despite everyone trying to trade it as a breakout, doesn't have to be a breakout. It might just end up being a range. And that frustrates the crap out of a lot of people. Don't let it frustrate you. Just know that possibility and trade that. All right, that's oil. Let's look at gold, and then we'll call it a day. I got a few more updates I wanted to show you guys. Here's GC1. This is gold holding the support. These are the futures. The 38.2 retracement, or the first level, happened to be the mid fight of this consolidation. 1249 was a perfect support. It's holding. We need to go out here on a 15-minute and start taking out some of the upside resistances if we're going to continue to rally. Markets are still getting hit right now, though. All right, we got to get up 1257 and higher, 1258. If we crack above here, we got some buy stops waiting to take out some short sellers. All right, that's what I'm looking at for gold. That's your level. We're close enough. We got to take it up and through here right now. You can see the support line. Draw this on your chart and trade with it, not against it. Momentum's in your court. Everything's going for you right now. And you got some potential upside here to capitalize on gold. Okay, I don't know what Fisher just said, but whatever it was, the market didn't like it. Look, market just took a hit. Slightly. I wouldn't say a massive hit, but rallied back up this VWAP, point of control for the day, and pressed lower. So careful, guys. There's going to be some volatility here in the afternoon. What I wanted to show you is some option stuff. Here's a screener of some active options that you definitely want to consider if you're trading today. Anything over 100% to me of option volume compared to average is a heads up, and watch the stock type of moment. Triple W, that's a stock you want to watch. WWW, HGT, and MDU. There's a ton of options activity. What you need to do is find the option strikes that are getting that activity, do your analysis, and find out if that's a support or resistance, and trade with it, not against it. All right, that's what we're going to do in the second half of this webinar. When we end this YouTube broadcast live, we're going to go in and look at these three options, see if there's some opportunity for us to make a trade out of this, because there's an unusually high volume. Okay, over 100 times volume of the average. That becomes super important. It's massive volume. Any questions from YouTube here, guys? From YouTube Live? Feel free to pop in the box and just turn on the questions. Let's just see what else I wanted to give you. I gave you some options flow. Netflix is reporting after the bell today. Super important that I show you this. So watch out for Netflix. That stock has earnings after the close. That's today. It's going to get really volatile. I know a lot of traders here buy straddles. They buy a call and a put in hopes of capitalizing on a move. That's a terrible idea for many reasons. It will pay off sometimes, but the times you lose, it's really frustrating. If you buy a call option right now, if it goes up to 108, 120 even, you might not be profitable because the option, even though the option's gone up in your direction, you still might not be profitable because of something called volatility crush. And if you want to know about volatility crush, sign up. You get a 14-day free trial as a Learn Package subscriber. You can read about all that and watch the videos. I'm holding off on a straddle. I'm not trading this thing till after the bell, but tomorrow morning, Netflix will definitely be probably one of our setups that we trade in our morning newsletter. Sign up. Go to tradeproacademy.com/Trade Pro Daily. Here it is. I'll put the link in the YouTube video as well. And you too could be on this list. You'll get the first update first thing in the morning. And I hope you guys sign up. Any last questions? I got some subscriber requests to do analysis here on a few stocks. So, all right, YouTube, have a wonderful day. Good luck trading. Be careful. There's not much on the economic calendar that you really need to worry about until the close. Stanley Fisher still speaking on the S&P 500 futures. Watch this 21 level for the downside and watch 27 to the upside. That's kind of the range you need to trade. So buy these dips until it breaks and then start selling these rallies on the break to the downside. Or buy the dip, get the resistance, take some profit out here, wait for a breakout. If you get a breakout, hold your long entry off the bottom. That's how a lot of traders, they trade breakouts, trade them. They buy support and wait through it to travel through this value area and try a breakout. That's your highest probability because you've already got profits sitting in your trade. It's not that hard to sit through a few more ticks to try to find out what's going to happen here. But make sure if you're long from down here, you take some profit up here. All right, it's sin, cardinal sin to get up here to the top of resistance and let your trade float back down without taking profits. If you do that, you're not going to be in business for too long. Good luck to everybody. Have a phenomenal session. Trade Pro subscribers, hang tight. I'm going to get to you in 1 second. I just got to press end here, and we'll look at our positions, and I'll answer some of your questions. Okay, have a great day, YouTube. Thanks for watching. We'll do another one tomorrow at 12:30. Hope to see you then. Take care and have a wonderful day.